Hi, Matt Bernstein from Low Cost Hustle, here to talk to you about the benefits of retirement accounts. In addition to a discussion on 401ks, I will also explain the differences between a traditional and Roth IRA. Gone is the day when you can rely on Social Security and pension to take care of all of our retirement needs. It is now necessary for Americans to fund at least a portion of their retirement on their own. Most employers now offer 401k plans instead of a pension. If your employer has a 401k plan, I recommend you go sign up immediately if you have not already. Once signed up for a 401k plan, your employer will automatically deduct a percentage of your salary to be placed in your 401k funds. Your 401k is just an account that invests your salary deductions into the stock market, with the idea being that over time this will add up to a lot of money. And what's better is most employers will match your contribution up to a certain limit. So if you're contributing, say, 6% of each paycheck into your 401k, your employer will kick in an additional 6%. Your employer is literally paying you extra money towards your retirement fund out of their pocket. Many 401k plans do not allow you to pick and choose individual stocks, but instead provide access to mutual funds and ETFs. If this is the case, look for an option that offers high growth or high risk. Some funds will have technology or biotechnology in the name. As a rule of thumb, these tend to be high growth and high risk funds. If your employer offers a 401k plan, sign up today and opt for the max allowed contribution. In addition to 401ks, there is another type of retirement account known as an IRA. An IRA is just an account you contribute money to with the intention of saving it for later. Unlike many 401k plans, you may invest your IRA contribution into single stocks, bonds, CDs, and really anything else with the exception of options and derivatives. The most frequently mentioned are the traditional and Roth IRAs. The traditional IRA is the more common of the two, and anyone under the age of 70 may open one and contribute. As of 2014, if you are younger than 50 years of age, you are allowed to contribute at least $5,500 to your traditional IRA each year. And those over the age of 50 may contribute $6,500. A traditional IRA is a tax-deferred investment vehicle, meaning only once you begin withdrawing the money in your retirement account, you are taxed on it. You are only allowed to make the full contribution if your yearly income is less than $114,000. There's a reason for this, and it has to do with giving a tax break to Americans that aren't considered rich. With a Roth IRA, you pay your taxes before you contribute the money, after which it grows tax-free. So no matter how large the amount in your Roth IRA grows to, you pay no taxes on it when you begin withdrawing your money in retirement. I personally have a Roth IRA and make the maximum contribution each year. I recommend the Roth over the traditional if you meet the income requirement. Those that contribute the max allowed to both their 401k and IRA will find themselves living comfortably come retirement. Let's do a quick overview of some of the possible scenarios to see just how much money you hope to have. We will assume that you can earn the historical rate of return of 11.9% on your investments, and that your employer will match 401k contributions up to 6% of your salary, and that your salary is $50,000 a year, and that you'll retire at the age of 55. For the first scenario, I have given an example of someone that does not participate in their company's 401k plan and saves $5,500 each year, but chooses not to invest it in the stock market. Perhaps they simply keep it in a savings account or under their mattress. And as you can see, an individual that invests their money in the stock market has much more comfortable retirement than someone who does not. And also, the earlier you begin contributions to your retirement account, the better off you'll be. Someone famous once said that the power of compounded returns is the most powerful force in the world. The person that started at the age 20 earns over $2 million more than the person that begins at age 25. As an added note, those scenarios don't take into account any raises in their salary or better than 11.9% rate of return. These numbers begin to grow much bigger if you take those into account. And please realize that it is never too late to start saving for your retirement, but the earlier you start, the better off you will be. It is much more advantageous to first max out your IRA and 401k contributions, but for those who want to earn even more money in the stock market, There's also an option of opening a brokerage account. A brokerage account allows you to almost unlimited freedom in the investment decisions, both in the amount you can invest and what you can choose to invest in. I hope that you've at least taken advantage of the IRA option, but also the 401k options. If your company allows them, it's really an opportunity to turn your money into more money, but only if you make these sensible decisions. In the upcoming videos, I'll explain to you, the best of my ability, how to take luck out of the equation so that you can reach the goals that you want.